Hello everyone, this is Dave, aka DREBG, senior member over at informedtrades.com. For those of you not familiar with Informed Trades, I welcome you to go over and poke around a little bit, look at all the free information and great traders they have over there, and learn a thing or two and maybe even share a thing or two. Today is Sunday, April 3rd, 2011. It's 4:15 Eastern Standard Time, and I'm going to go over a trade on the pound dollar that I made this past week. Nick had posted something. He's a new member over at Informed Trades. And I thought I'd hop on the bandwagon simply because I made a similar trade as what he was trying to do, but just did it in a little bit of a different way. This is the weekly chart of the pound dollar. This is done after the trade had been complete, so I apologize, but I hadn't taken the time to actually put this together until after the fact. Right here, it's pretty darn obvious that we are in a range. It's supported by this 200 EMA at the top, and this support and resistance line here at the bottom. So this yellow area is pretty much what I marked off as the bottom here on this candle, and the top was up here at this candle. That just happened to be supported by those two areas. Now, the nice part is that when you have a consolidation that's that pronounced in an overall weekly downtrend, hitting an area like the 200 EMA and really bouncing like that, it really needs to give you time to pause and say, what do I think price action is really going to do here? So taking this next level, when we go down to the daily chart, you'll see that what we've done here, we've added a few things. We've added these support and resistance areas, these red lines from a daily perspective. We've also added a fib study from this swing high to this swing low. And of course, one thing that also translates to what Nick had done is adding in this area of divergence represented by this white line. So when we're looking at this and you start to see the picture forming, the trade actually ended up being somewhere after this divergence with a play hopefully back up to the top of the range. That was at least the initial idea behind it all. When we go down to an hourly chart to really see the setup, you'll see what I mean. From an hourly perspective, what happened is I saw this double bounce, or this double bottom I should say, see this higher retest of that lower range base. That to me was a great place to get long, and the target was just the 38.2 fib retrace of that daily chart that we saw before. You can see there's the fib, and here's the 382 around that support and resistance area that we drew from a daily perspective. So going back to the hourly, we got in here after we had a pretty pronounced candle rejecting anything that was going to push lower. I got in here right around the 8 o'clock hour on the 29th, and we started getting some good play, a little bit of a pullback, and kept going. I did move the stop up a little bit here and there along the way as I managed it. The stop loss, by the way, was below the range. As we got closer to this 200 EMA on the hourly, I started to get a little nervous and questioning whether we were actually going to reach that level. It really kind of needed to reach the 382, get rejected, and then get some speed to get back up to the top of the range. So I wasn't too concerned, but then again, I wasn't about to give back any profit here. So I kind of got out a little bit early. Just banked 143 pips, and it really worked out very well. In fact, when we had this rebound on price action back down to this support and resistance area, I decided that this was another fib retrace of this low to high, that it was a good place to get back long to try and shoot for the top of that range. And again, I'll bring that range up again. We were way up here. So I was really hoping that we could get a bounce and go back long to the top of that range. We got in, and as price reached another minor support and resistance area and got rejected, I got a little bit nervous in here. The stop loss is very shallow, right below this swing. Didn't do much with it, left it where it was. We got back up here, but since we put in a lower low than we did here, we're also being rejected by this 200. I didn't feel good when it started to drop some more. I ended up bringing the stop loss back to break even and just got out of the trades totally. I also wanted to be out of this small spike here. Was the non-farm payroll. I didn't want to be in there when that took place anyway, so all in all, it worked out for the best. So although Nick's trade used mostly a divergence type of trade, it worked out either way, whether we use divergence as your initial run up of whether we were going to get in or not, or you used it as a confirmation, as I did, from a higher time frame on a weekly. It didn't really matter, because at the end of the day, we're still left with the same type of result. I just really felt very strongly about this retouch that was a little bit higher at the bottom of the range. This is money in the bank almost, guys. I mean, it's really something that I'm pretty strong about. So with that, if you have any questions, feel free to email me at drebg@yahoo.com, or you can catch me on my blog at informedtrades.com. Thanks, and have a great week.